High dividend stocks have performed really well in the past few years. What are the prospects now for this kind of equities?
Well, you're right to point out that equity income strategies have done very well over the last couple of years. But what I think investors fail to appreciate is just how important dividends are as a component of long-term equity returns. So to give you some numbers on that, 2/3 of real annualized returns in the long term come from dividends and the reinvestment of those dividends. And on top of that, if your investment horizon is greater than 1 year, then that effect becomes ever more important. So the first thing I'd say is that equity income investing is a strategy for the longer term. The other advantage of equity income investing, certainly versus other asset classes, is that if managed properly, the yield you get is a real yield. It can be considered a real yield. So it gives you an element of inflation protection over the longer term.
If we concentrate on a shorter time horizon, how do you think high dividend stocks would perform in a risk-off phase of the markets like we witnessed in 2011?
Well, one of the advantages of an equity income strategy in a lower return and more volatile environment is that they generally tend to be low beta strategies. So there's a focus on capital preservation and downside protection, which of course is a great strategy within a more volatile equity environment. And if it's a lower return equity environment as well, then income will become an ever more important component of that total return. So a strategy which taps into that is a correct one.
What kind of securities you seek for your portfolio?
Well, the process is very much bottom up. So the kind of characteristics we're looking for investments within the fund are companies which are very resilient, very cash generative, with strong balance sheets and well-covered dividends, and of course with a healthy yield to boot. So those are the companies that we're looking for. If you push me on various sectors within the market that display those characteristics, I would offer you pharmaceuticals as a good example, where yields are 4.5–5%. There's a good margin of safety because balance sheets are strong and cash flow is very, very good. Perhaps less consensual, an idea would be the IT stocks, and IT stocks are reasonably well represented in the fund. I think 10 years after the TMT boom, these former darlings of the market have derated into very mature businesses with cash flows are very strong, balance sheets are strong, and they're starting to pay out dividends. I'm sure you've seen recently that the likes of Apple have started to pay dividends. So while initial yields aren't particularly attractive, dividends are growing very strongly and yields are therefore catching up. And we would expect these kind of stocks to contribute disproportionately to the dividend growth within the overall fund.